was done with trading this morning, and I decided to have a live session where I talk about kind of the overview of what I've been doing these past 42 days of trading. I've been actually trading, to kind of give background, for around 2 years now, on and off, not really taking the plunge and really spending a lot of time just kind of moving averages, all your retail stuff that I've used in the past. I can never felt like sometimes it would work, but there's just some accuracy that I wanted that ICT, when I saw his stuff, I really appreciated. So to kind of give an overview, this is my 30 days, or I've been trading 43 days, but on one of my accounts I've traded for 30 days, and we can see the profit, the review. And disclaimer, this is a demo account, so I haven't gone live yet. Been wanting to trade for 90 days. I give it 3 months of price action and of logging and all that stuff before I take it to the next level. Anyways, so if we look at our paper trading account here, we have $27,343. I started with a $25,000 account, and in 30 days we grew that to the $27,343. As far as like the videos, there might have been some videos days that I didn't forgot to stream live or post where we made some profits. So it might have been more than 30 days, maybe like 40 days, but it's around that time frame. If we look, so I stopped trading this account and entered the Leap competition, which is something that TradingView offers, which is really cool, by the CME group. If you get in the top 10 spot, I think you get like $1,000 or something, like if you're, have the highest gains over a period of time. Anyways, so we entered that, and so far I'm at $7,000 on that one, which is not a lot for a $257,000 account, but it's kind of cool. What I've learned during these days, it's been fun. What has actually changed, even just this week in my trading, about how I am more confident in taking the trades. So I went and back tested this one night quite extensively. But let me just remove all this stuff from today. So there's two things, or actually, let me see, one structure, and then, okay. So there's three things that I use the most of. Of course, there's like, it might be four things. Well, let me just talk about it and then get into it. So there is, let's see. So, for example, this morning, and I'll give more examples of this. This morning, I'm not going to cherry pick here. This morning, we had a breakdown of this low here. I had a breakdown of that low as well as this low here. So these ones that broke down, so we can draw our fib from the previous high down, and we'll look for a PD array above the 50% retracement level. So what we do, we take our GAN box, because this is what I use for order blocks. So order blocks is here. We would take a trade and see it sell off. If, for example, we took the sell here and it goes against us, say up here, we get stopped out or whatever, we can now reverse our bias. This is what I do. I reverse our bias, draw our fib to wherever, it made a swing high after taking out that high, and then we can look for a PD array like this order block or something in here, fair value gap, whatever it is. There's an inversion fair value gap here. We can look for now for price to come back in after taking out a swing high, for it to come back into a discount, and then for us to look for targets like, buy side, like, classic ITC stuff, buy side here, here, and here. So that's what we'd be looking for. Instead, we broke down further today, made a new low, and then we're trying to work our way back up to a premium and then trade down to a discount. Anyways, so even if we take, for example, just a random day, this is even was afternoon session. So if we take this right here, this is what I love about watching structure paired with fair value gaps, because I think I kind of lost sight of this market structure and was just looking for fair value gaps and order blocks and stuff like that, and that is not going to help you. Like, what's really going to help you is watch market structure and then take trades according to market structure. So what we have here, we have a low here, and then we have a swing low here, so we can move this bar up. That is because this swing low is validated as a swing low because we moved one above this little swing high here, and then we made a new swing high. So now we take our fib, we draw it here, we look for fair value gap, order block. I like, if there is a fair value gap and an order block paired, I usually like to take the trade off the order block. That usually gives me the best entry, like the 25% retracement of that order block right here. We take the trade, it moves in our favor. I usually like to take profit short for right now until I get better, but I'm going to take profit there, and then if I have to, I'll leave a runner, whatever I want to do with it. And then so we broke above this high here. If you take that, now we draw. So this would not be a swing low yet. And this is what I'm trying to figure out, quite honestly, what I would classify as a swing low and what wouldn't be a significant enough swing low. Like, this is definitely, like, I like the structure of that. This is chop, and we would take our fib. If we did fail this, let's say we did say that this was the swing low and we're looking for bullish price action. So it has to violate this low. It has to see a body close below that. So we could take a, let's see if we can find, I mean, you could say that this is an order block, or you can now treat this as inversion. Fair value gap 2. So we have an inversion, fair value gap. We take our trade in there. Stop loss below, not that swing low, but probably below this order block here or that. I'm still discerning how I want to treat my stop losses as well. And I'll probably make some more videos about that once I master that. But for right now, I am not a master at it. So you could take a trade off that. It goes up and then take profit there. We broke above this. So now this is the new swing high we have to break above. And this is the swing low. We broke above another. We made a swing low here. So now we can draw our fib. That we didn't get a trade in there. At least you could take one off of this fair value gap. I like it to go actually in a deeper discount. Alright, so we made another swing high here. Here's the swing low. So now we have this here. Look for something below equilibrium. So we have that order block and that fair value gap. You could take a trade off that gap, go higher, take profit. Okay, so that's just an example. Okay, so let's say, for example, this one. It breaks above. You place here's the low. And now you have, and it's not going to work every time. You're not going to win every time, but for the majority of the most part, you're going to win, especially if you do your stop loss right. And then we broke above, so now this is the new high. We draw our fib. And I think what will really help me is where you pair this with long-term bias levels. So we're aiming for a higher level all through here as we're trading higher, and then expecting, you know, a reversal or resistance at a certain level. But I'm still back testing all that. So for example, if we were just to take off break of structure towards the upside, and then wait for the swing down to a PD array or a discount, Then we would take, for example, like this right here, paired with this order block here. We take the trade, it goes in our favor, and then we get stopped out here. Probably would get stopped out. So now we have a shift now where we've shifted. Now this is a swing low, and this is still our high. So we take our fib, draw it in time, and now we're looking to short. It goes up into this, so above this we don't really have anything. We have a order block here, I guess you could say, that we could take a trade off of, and then we have a fair value gap here that we closed above. Closed above it. I like strong closes. The stronger the close, the better it is above a place like this, but we'd have probably gotten stopped out. Very short stop. Like if we took a trade here, it maybe lost a little bit, but our winners are a lot bigger than our losers so far. And then let's say we broke down here and we would have lost 2 times because it went against us. But the nice thing about this is, for example, like we break above here, I can be taking long positions off of this as it goes up into where I want to sell. So as we're taking longs, it goes up to an area where I'd be looking at taking a sell, such as this area here, where I'd be looking at taking a sell. Now, like once it hits, that can be a target. So we break microstructure here. We draw our fib. We take a trade off that order block right here. Goes up in our favor. And then we draw our fib again here. No trades there. It still goes up into our favor. And then we can, if we're expecting to sell, expecting to take a short at this level because we broke below this here and that swing low, we made a lower low here. Now we can expect price. We're expecting to take a short, but we're buying as it's going higher into the price where we want to short. So if we've taken profit all through here, if we have a stop loss above here and we take a short and we lose, this will usually mitigate whatever we lose when we take that short. So that is kind of the model that I'm adopting. It really, you have to be, especially me, I have to be confident in just watching the structure and then taking action when it gives me the trade. And then if it stops me out, that's no problem, because now if it stops me out, I can look for a buy. So, or the opposite of what it went against me. So if it went against me, then I can look at taking the opposite side of what it went against me. So like here, I would look at buying. It did stop me out here, but we'd look at buying that and then seeing. So anyways, that's kind of what I'm looking to use as a strategy. It wins more often than not if I just keep, my expectation is just to keep trading every time it gives me that opportunity. I place a trade, goes against me, fine, just wait for the next setup, and then because I know more often than not I'm going to win the trade. So that's kind of what my expectation is, or my model, a little bit in a nutshell, of what I'm looking for. So alright, so that was pretty much it. That might have been really confusing for some, but just to kind of confirm to myself, sometimes I'm a processor when I speak it out loud, or when I do videos, it helps me like retain information. But yeah, so after 30 days, we have $2,343 in profit after 30 days of trading ICT. So I guess if you know what you're looking for, you have a model, it can be profitable. So it's very exciting. I might just do 60 or 30 more days before I start trading a live account. I'm not sure, but it is exciting to make profits my first 30 days, and we'll see where it goes. So hopefully we'll be trading with some funds soon, and maybe I'll do some crypto as well, like do some crypto analysis in the channel and stuff like that. But leave a comment below for what you guys think. If you guys need something explained better, or you guys are confused about something, feel free to leave a comment below. Like and subscribe if you want to, if you find value in this channel. But if you don't, that's not no skin off of my back. So all right, you guys have a lovely rest of your day, and we'll see you in the next video.